Welcome. In this video, I'll be explaining a game-changing pattern that I've never shown before. I call it the 3-peak fake out, and it's exactly what it sounds like. There are 3 peaks that fake out and stop hunt people before the real move in the trend's favor resumes. So this pattern is something that I've used for a long time. I've actually taken live trades using this pattern in my trade signals group, which is free to access if you just use one of my affiliate links and then send me proof on Twitter. All the links in the description for that. We've been having a lot of success here with my trade ideas being posted in real time. So check that out. Just check out my Twitter in the link in the description and message me. Send me proof that you've used one of my affiliate links. It's completely free to do. So just show me that you have, in fact, used my Bybit or BitGet link and then get access into the signals group. And this idea with these 3 peak fake outs is highly successful, especially in an emerging trend. So in a new downtrend, the first time this happens, that is the most high probability setup. Just like in an emerging uptrend, such as here, when this pattern occurs, it is high probability the very first time, and then each next time in that same trend that it happens, maybe the odds are going to go down because the trend starts getting extended. But when you see this happen at the beginning of a trend, extremely high chance that you're going to have a successful trade, or at a minimum, it's going to give you an opportunity to take partial profits or move your stop loss to break even. So that's how I stay profitable, is that most of my trades, even if they don't win, they go far enough in my favor to get my stop loss to break even or take partial profits, okay? Now, I'll explain the exact criteria that makes up a 3-peak fake out setup, including where the actual entry can be taken with this setup. This is not just any 3 peaks. There's a specific criteria that needs to be followed to make sure that the setup is actually proper. So what I'll be doing is using the Trade Pro market structure indicator so that it's completely objective. That way I can't say that, this one setup is valid and this one's not. I'm keeping it fully objective using an indicator so that I can't have any bias towards a specific setup, okay? I'm also going to be using the 200 period exponential moving average and a 50 period exponential moving average for trend direction. If the 50 period exponential moving average is below the 200, that is a downtrend. I'll only be looking for short setups with the 3-peak fake out setup, and then I'll only be looking for longs if the 50 is over the 200 EMA, okay? And as I said earlier, the first setup after a cross into an emerging trend, so the first setup after the 50 goes over the 200 is going to be the most reliable and high probability setup. Just like when the 50 crosses below the 200 EMA, the first 3-peak fake out setup that we see is going to be the most high probability one that gives us the best risk to reward ratio, the best move, the best entry. So let's talk about the specifics, what actually makes a valid 3-peak fake out setup and where you can take your entry with it. All right, so what makes a valid setup? Well, this setup is made up of 3 peaks. We need to see first a drive and a pullback, then a higher high that sweeps the high of the first drive. So a higher high push here, sweeps that high, and then another pullback, and then a final third push up that sweeps the high of peak 2. And that is our final one that we're looking for the entry on. So once we have the first 2 peaks, higher high on peak 2 compared to peak 1, and then we're looking for peak 3 that makes a higher high compared to peak 2, sweeping the high of peak 2, and then that is the final fake out that we're looking to get entry on to then look for that next move in the trend's favor. So it's 2 sweeps of highs, then trend continuation. The entry is looked for over the high of peak number 2, okay? So we're looking to get short above the high of peak 2. Once peak 2 has formed, we have this pullback. We're waiting for peak 3, and we want to see this come up, sweep the high of peak 2, get our entry above the high of peak 2 for a deep discounted entry, and then looking for a trend continuation move with a good risk to reward ratio. That is the setup for a short, and this is what you'd be looking for in a downtrend when the 200 EMA is over the 50 EMA, okay? Now let's take a look at a long setup, and we're gonna go through a bunch more setups so you can see plenty of examples of valid opportunities. All right, here's a long setup. So you can see with the long setup, we have 3 intermediate term swing lows, each one consecutively lower than the next. Okay, so we have our initial swing low created right here. We have price pushes up. We have our next push down, sweeping the low of the first push down. And this creates another intermediate term swing low, lower than the previous one. We have a push up, and then we have our final push to the downside where you would be looking to get long below the low of peak number 2. So down here is the entry territory to get long, looking for that next move to continue the uptrend, which swiftly occurs here. Now, just because we have these 3 peaks, it doesn't mean it's valid. We need to see the specific criteria where we have these intermediate term swing lows getting lower each time. So first one, nothing that we're interested in. Then we see number 2 that's lower than this number 1. So now we have the setup starting to form. We need to see it push up, and then if price starts coming back down, we're waiting for it to cross down below the low of peak number 2, and that's when we have the confirmation that we're possibly having a 3 peak fake out setup to get long in the context of this uptrend where the 50 EMA is over the 200 EMA, which is what our definition of the long or the uptrend is. Okay, now let's take a look at a bunch more examples of both shorting opportunities and long opportunities so you guys can kind of see what they look like. Here's another short example where we have the 3 peak fake out set up with 3 intermediate term swing highs consecutively getting higher, and we see this first one pull back, drive up for the peak number 2, sweeping high 1, push down, another sweep up for a consecutive third higher point for this intermediate term swing high here. This is where you'd be looking to get short because we're in a downtrend with yellow under the white EMA, 50 under 200. This area above the purple line is the shorting territory to get that entry, looking for this trend to continue to the downside. Okay, now let's go to another example. All right, here's another short setup. So we have a new downtrend. The yellow has crossed below the white, and we see a intermediate term swing high. We see another intermediate term swing high here that forms higher than the first. So then we can kind of be on guard, ready for this to make a third high, and it does so with this push up, sweeping the high, and that's where we're going to be looking to get short, looking for this move to come down. So this here, we're looking for that move to follow through to the downside after sweeping the high here, looking to enter when others are being stopped out of their position, as you are going to have a lot of people shorting on this move down with their stop losses just above here, and we're looking to take advantage of those people who get stopped out above that high right before the move goes in their favor. We're entering when they get stopped out. That's the idea here. So let's look at another example. Here's a long example where we see an intermediate term swing low formed right here. Then we see a second that forms lower than the first, so we can start looking for this to push down and take out the low of the second. And it does so here, so in this area we'd be looking to get long, looking for a move to the upside, and that is the setup there. So let's take a look at another. Here are 2 more shorting opportunities, and we have one higher high here for peak number 2, then our third that sweeps the second, and then that is our shorting opportunity up here. So 3 peak fake out there. Now another one right here in the downtrend, and we have 1, 2, 3 peaks. This one creating a higher high compared to the first, higher intermediate term swing high. Then we look for the sweep of the second, and that is our shorting zone above that second high. We're looking for a move to the downside. So that is the setup there. Let's move on. All right, I found the final example, and this is a bit of a different one. So more of a complex setup where you actually wouldn't want to take this 3 peak setup right here. And the reason for that is that it's inside of a larger pullback. So what we're trying to do with this strategy is stop hunt and enter where other people are getting stopped out before the trend continues in the overall trend's favor, without those people who got stopped out. So we're taking advantage of stop hunt. Now here we have this high which doesn't get swept, and this is in the context of all one pullback. So the pullback starts down here and it's coming up, we get this 3 peak fake out set up here, or what looks like it, with the 3 consecutively higher intermediate term swing highs. But this would not be interesting to me because we want to see this high swept still before the trend is likely going to continue. And we actually do get that over here with another 3 peak fake out setup that does take out the high over here. So ultimately we'd be interested above this high in getting short, and this is a bit more of a complex setup, something a bit different than just the standard ones that I was showing earlier. And this doesn't happen super often, but it does happen, so it's something to be aware of. Another thing to be aware of is 2 peak fake outs, which are a bit less reliable, but they happen very frequently, so much more frequently than the 3 peak fake outs. So we have a 2 peak fake out here where it sweeps the high of the first and then continues the trend, and it's just a stop out move looking for liquidity above highs before continuing the main trend, going without those people who got stopped out. Another one right here. So you can find these all over the place, and it's a very common pattern, but for the interest of this video, gonna mainly just stick to that original 3 peak fake out strategy, and that is a great one to practice. You need to do some kind of back testing and practice to determine how far that price goes against you most of the time over that second peak, so that you can get a good entry and know how to place your stop loss. So do some practice, check out a bunch of these setups. They happen very frequently if you look for them. I'm on a 5-minute time frame, euro against the US dollar here, and I have a 200 period and a 50 period exponential moving average. So you can see the settings in here, and this is just a 5-minute 200 period EMA, 5-minute 50 period EMA for trend direction. Okay, so that's going to conclude it for this video. If you guys are interested in getting access to my live signals and trade ideas posted in my Discord group, you can do that for free, but you do need to use one of my affiliate links. I'll link those affiliate links in the description, and then message me on Twitter. I'll also link my Twitter in the description so you can message me, and then I'll give you a private invite link to the signals group. All right, so thanks for watching and have a great day.